Hi, it's Jeffrey Cohen, Chicago Quantum. How are you? We're a registered investment advisory firm in Highland Park, Illinois. We also run a quantitative model. We are looking at this market, and oh my goodness, are we seeing a lot of things that we want to talk about? So I'm going to try to keep it quick. The first is, yesterday I showed you a portfolio. And I said, yeah, this portfolio is going to do really well. This is what the Chicago Quantum net score picked. I'm going to show it to you. And then I'm going to show you that even though the market is not doing well, this portfolio has done amazingly well. So we're just going to focus on these 7 stocks. Affirm, Cardlytics, Checkpoint, which is biotech, Carvana, Heliogen, Open, and TNA. 30 ticks of edge. 30 ticks of edge. So what's the good word here, right? How's it happening? So let's see. And I already know the answer. The answer is these stocks are doing amazingly well today, even though the market is red. So the question is, well, first off, how many billions of dollars did we have invested? The answer is none, because we run this for our clients. And then the other question is, could you have bought it? Sure. You buy a run for $100, you get the run like 10 o'clock at night. You can buy it pre-market if you want. So let's take a look. I don't know exactly where I have all this stuff, but hopefully I've got it handy. Here we go. So we'll start. That's okay. So we'll start with Affirm Holdings. Is up 0.1. So we'll just say that that's. I'll just say it's up 3 cents. Okay. Next is Cardlytics. Cardlytics is up $1.13. Which is a lot, which is 8%. The next is Checkpoint. Checkpoint is a very high-risk biotech. That's down a penny. Okay. So it's flat, down a penny. The next is Carvana. Carvana's up $1.13. That's pretty cool. Then we'll look at Heliogen, which is up 15.5 cents. It's 4.5%. I'm going to round it. It's up 16 cents. Open Door Technology is up 18.5 cents. So it's up 19 cents. So on a day when the market's pretty much all red, but the Russell's up, and the Russell, the small caps are where it's at with our model right now. We look at TNA, it's up 35 cents. It's up 1.25%. So if you would have bought a little bit of each of these stocks yesterday, you would have made money today. Now you could sell it, take your profit, or you could hold it. And so generally speaking, we hold our stocks for 20 trading days. That's what the original research said. It's really up to you. So this is great. The picks from September 26th, is it 26 or even 25th? Oh, so it's the 26th, because it's the close of the 25th is the data. So performance of the Chicago Quantum net score for September 26th run is right here. So that's great. Now, it doesn't mean it's going to go up every day, but on a day when the market is down, on a day when the market's kind of rough, it's nice to see that. So here are stocks that we're tracking, and I'm going to show you because when I tell you what our positions are, you're going to realize I'm not pumping and dumping at all. I'm pretty boring right now. I own a little bit of SMLP, and I'm short a little bit of AppLovin. So SMLP is down 7 cents. AppLovin is up 9 cents. Both our positions are not doing well today. Shame on all of us. But yesterday, I made a good move, and I want to talk to you about it. This is really important. Yesterday, I sold Skills at $5.39. I bought it on Friday. It looks good in the model. Apps also looks good in the model. So we bought Skills for like $5, and we sold it maybe $5.06, and we sold it for $5.39. Made a good profit, walked away. Digital Turbine, we bought it for around $6. Maybe it was $6.10. It went up to $6.20, but then it dropped to $5.93. We sold it at $6 even, maybe $6.02. Why I say that is because Digital Turbine kept falling. And I thought to myself, let's try something different. Let's cut our losses, especially if we can match it up with a profitable trade. Instead of holding on and becoming a bag holder and then wishing 3 months from now that I didn't get involved, just sell it at $6. It's at $6. I could buy it again at $6 right now. I didn't lose anything. But Skills, I can buy it for 11 cents cheaper. That's actually 2%. That's a pretty nice difference. I'm also tracking Atlas Lithium, and that's a stock that I think is overpriced. ATLX, I believe, is overpriced. So I'm gonna drop that in the chat. Let's see if anyone wants to bait the hook on that one and talk to me. So there's other stuff as well, but that's pretty important, right? So I'll put those away. We can come back to that at the end. The other thing I wanted to share with you was a tweet that I sent, very important. I just did light due diligence on Alcoa, which is aluminum, and FAF, which is contract manufacturing. Here's a picture I posted. For the second quarter, manufacturing revenue was down from 3.6 million to 2.6, 3.6 billion to 2.6 billion. It's a huge drop. So, that's Alcoa, I'm sorry. 3.6 billion to 2.6 billion. That's why I got my numbers wrong. That's a huge drop, right? Manufacturing. Now this one is 42 million down to 34 million. That's also a huge drop. It's like 25%. So what's going on? So I did a little homework and I asked a few questions, but I don't think we want to blame senior management. I don't think we want to blame the sales force. I definitely don't want to blame the manufacturing people. I don't know what to do, but I can tell you that the ISM Manufacturing Index, we found it in Google, has been down for 3 months in a row. So manufacturing is down, and manufacturing is down in the companies we're looking at. So if you're looking to invest in manufacturing companies, my guess is you're going to find a lot of pain. So kind of point number one, right? First off, if you're Taylor Swift and you bought our portfolio, which we've actually, the Chicago Quantum Net Score long or up portfolio, right? We've now nicknamed the Taylor Swift portfolio. Because someone like Taylor Swift could take 5% of her assets, drop it into those stocks, and really, really outperform the S&P 500 on an adjusted risk versus return basis. It is the Taylor Swift portfolio. It is for high net worth individuals, large portfolio managers, wealthy people, accredited investors. So the other thing though I would watch is I would watch manufacturing. Manufacturing is in a downturn. And you can see it in automotive, right? In automotive, it's like a train wreck or a car crash in slow motion. Because there you have labor issues. You have cost of labor issues. And you have this transition like from internal combustion to electric vehicle. So I worry about automotive. The steel industry is also in trouble. Right? And so we have aluminum. We have contract manufacturing. Here's the other thing that we saw, and I don't know if it's true, so I'm going to pull up a screen for you, but I could go into some stocks. Pharmaceuticals. Large-scale pharmaceuticals. I believe that they are also in trouble. So let's take a look at 1 month performance, industry. I don't know if I'm going to be able to find pharma, or is it under healthcare? Drug manufacturers. So if I look for 1 month performance, you see AbbVie and Amgen are up, low single digits. But you look, and all the other ones are down. These are the big ones. These are the ones in the S&P 500. I could look for any, and you see there aren't that many, and most of them are down. I mean, Glaxo's GSK, GlaxoSmithKline, or GSK is up 5%. So that's another one that's up. But most of the rest of them are down. And so drug manufacturers don't really move with the economy, but a really bad economy means people spend less on healthcare, means problems. I've also heard, just anecdotally, in our area that hospital rooms are at a premium. They're full. And so it could be that things are happening, but just net pharma or drug manufacturing is down. And there's others as well. We could just look at we could look at any industry and just big stocks, big market cap stocks. You know, I like to do that sometimes. I'll look at just over 10 billion. I'll look at mega cap, 200 billion and more. And you see that for the most part, they're either flat to negative. There's a couple that are up. United Healthcare in a month is up 2%. AbbVie, 2%. Now, ExxonMobil doing great, right? Up 9%, but the price of oil is through the roof. But you take a look, and like even Walmart is up 1%, but Amazon's down 6%, Alphabet's down 1%, Visa, Bank of America, MasterCard, JP Morgan, they're all down. Merck, J&J, Eli Lilly. Apple's down almost 6%. Microsoft's down almost 4%. Broadcom. So everything's down. Oh my God, look at that. Nvidia's down 10.5%. Oracle's down 11%. So large cap is down. And these are just broad statements. This isn't, we're not getting real specific here, right? I just want to show you that certain things are happening. And so I get worried about when manufacturing is down, because I want to buy Alcoa. I do. But it's really hard to make the call to buy Alcoa when they're destroying shareholder value just by staying in business. Right? I mean, I don't want to invest in Alcoa. I might as well wait until they finish destroying it, right? And then maybe buy it at a bankruptcy. I don't know. It's crazy. It's crazy. I don't like it. So we're going to talk some more. I got a whole bunch of stuff to tell you. I'm glad, though, that our stocks did well, even though everything else is crap in this market, right? The other thing I thought was important is the S&P 500 is heading for what I called a trend continuation, but really it's a potential head and shoulders. So I'm just going to show you a funny chart here, not a... Do I have it? Futures. Take a look at this. It's been going up. It's great. 3,600. We all should have bought. Went to 4,600. It's great. Lock and load. But then it's been dropping. So it pushed to 45. Fell to 43.5. 43.60. Pushed to 46.10. It fell. Looks like the close is at something like 43.80. Pushed to 45.50. Now it's down to 42.89 right now. It has broken the neck. We really have a head and shoulders. You have volume confirmation here on the left shoulder. You have some volume confirmation here. Light volume on the peak, heavy volume on the fall. It did make its peak though on some low volume, but then some high volume. So that's a little iffy. And then high volume on the collapse. And so we've just broken the neck of a head and shoulders. I don't know about you, but that doesn't feel so good. That feels really bad, actually. And so I think this is something that we should talk about, right? Because if the S&P 500 is going to collapse, how far down does it go? And do you sell stuff or do you wait? Personally, we're not going to sell any of this. We're just going to wait. I mean, what am I going to do? Sell my $58 worth of stock in my 401k and then what? Put it in something stupid so it goes down? I'm just going to wait. S&P 500 has been a good bet for a long time. I'm just going to hang out. But, you kind of see the car crash coming. You just don't know how far it's going to fall. That's how I feel right now. We see the car crash. We see the head and shoulders. In what we call ES_F, which is the S&P 500 index futures. Neck is broken. Look out below. What are we doing? Absolutely nothing. We are net short the market. But this is just a slow motion wreck. And we are strapped in like the rest of you. And that's it. We're just going to wait it out. Now, if it hits 3,600, I'm jumping back in. I am going crazy, right? But this is rough. This is, when you see this, you should get really nervous. I mean, I feel like, you know what? I'm going to pin this to my profile. We're in really big trouble here. So I just want you to know that, right? We're in really big trouble here. Holy crap. And what do we got on Koi Fin? Sometimes they don't want to show me the good stuff. No, this is crap. I don't want to see that. Let's see if I can get a picture. Just a picture of some lines. Squiggly lines coming. And then I've got a whole bunch of other stuff teed up for you. So if I look here, you see the Russell is still up. But everything's kind of coming down. Over the year, you see it. Look at 5 days is probably realistic. 5 days, it's a pretty big downturn. Now, U.S. Treasuries are down 0.4. That means Treasury interest rates are up. You see the 10-year at 4.62. That's high. So now we're going to go to some different data. Ooh, I might be able to buy back in on some of that stuff I sold yesterday. I like it. I like this. So let's see. Let's see. What do we got? I'm just going to open some stuff up. So this is what we talked about before. These were the stocks that the model picked. So Affirm is now down 15 cents. Cardlytics is up $1. Checkpoint is down a penny. Carvana is up 92 cents. Heliogen's up 15.5. Outdoor is up 17.5. TNA is up 19. We're still up. We're still looking good. All right, Jeffrey, what else you got for me? Bunch of stocks that we were starting to do due diligence on. I'm just going to flip through them. I want you to think about what I'm thinking about. This is not the underlying data that drives stock market performance. This is just a bunch of stocks that piqued our interest. And I'm going to start here. So Verizon goes down when interest rates go up because this beautiful dividend, according to Yahoo Finance, an 8% dividend, isn't worth what it used to be worth when interest rates were 0. It was worth 8%. When interest rates are 4.6 for 10 years, or 5.5 hitting 6 for the short term, 8's only 2.5 points higher. So Verizon isn't worth the business risk. Well, I didn't renew my cell phone contract at the same price, so Verizon just lost all that profit. This is why Verizon's falling. There's no reason for Verizon to fall. I mean, other than the fact that they are not a growth company, they're a utility. But they fall because interest rates are going up. Okay. So that should be the same with AT&T, right, Jeffrey? Yes, it is. AT&T, although it has some different issues with the spinoff, it has also been falling. So, okay. Verizon, AT&T, a bet on interest rates going down. We don't see it yet. Now let's look at gold stocks. Gold stocks have fallen to the floor. I mean, so Anglo Gold, I think that's the one that, that is now primary listed in the New York Stock Exchange. So it's another $7 billion of gold exposure. Newmont Mining should be here somewhere. Yep. Newmont Corporation has been up. It just didn't make it. So now it's crashing lower. So another gold stock. So what else is down in this market? So let's talk about it. So what else is down is large telecommunications companies that pay a large dividend. Down is gold miners. By the way, I like gold miners. I think that's a really good business. You open up a mine and you work it for 20 years. Barrick Gold. Barrick Gold is also down. I think this is a smaller one. It's still worth $26 billion. Newmont is worth $29 billion. Actually, I thought Barrick was smaller than Newmont. But if you take a look, Barrick for the year is up slightly, but it's actually been crashing. Same kind of shape. So gold is down. So now, what about the large drug companies? We talked about it. Look at Pfizer. You could argue a lot, but people were buying it from 40 to 50, and now they're not buying it at 30. Pfizer's in trouble. Pfizer pays a 5% dividend for a company that still invents drugs. You see Johnson & Johnson, you see Merck is down, AbbVie is down, Eli Lilly, right, a real glamour stock is down, although a little bit less. Bristol Myers Squibb is down. So drug companies are down. Now, we still own a little bit of Summit Midstream, and Summit Midstream has just not really moved. It's almost like a Poisson distribution. It's just falling and not really going anywhere. That's rough. It's at $13. Probably should buy some more. By the way, I do have a position in Summit Midstream. I'm long. I like it. It's a good stock. I recommend it for those like me that can handle an MLP in their portfolio. Loan Depot. So there's a couple of companies here that are really relying on mortgages. And the thing that's important is that mortgage rates are up, but mortgage margin or profit percent was flat last we looked. So there are fewer mortgages. That means there's less profit. So if we look at Rocket actually recovered recently. I guess people thought maybe the housing crisis was over, interest rates were coming down in August, and they did come down a bit. But now the stock has dropped from 11 to 8. Loan Depot, similar story. Stock maybe touched $2, down to $1.70. So the other thing is mortgage providers are lower on higher mortgage rates. That makes sense. But the other thing we noticed was SelectQuote. So SelectQuote sells insurance online. And that really hasn't held its gains at all from last year. That's just a tough business selling insurance. Tupperware. What's interesting with Tupperware is look at how it fell down to like 64 cents, and it memed higher, and now it's drifting lower again. I'm guessing that this is a bankruptcy play, right? But I have not. Earnings are only slightly negative, which is interesting. It's not necessarily a stock to drop to zero, but what's going on with Tupperware? It's worth $67 million. I use Tupperware products. I like it. It tells me maybe that's a stock that we should look at. Maybe there's something there. Now, I'm sure the memers are going crazy, but we're going to take a look at that one, right? So Tupperware needs a lot of due diligence. Unisys. Unisys is worth $234 million. I remember looking at Unisys, working with Unisys in the past. That's another one that's worth a little bit of homework. If we look at it for the year, though, you can see it was an $8, $9, $10 stock. It just crashed to 4, and now it's down to 3. So Unisys must have a lot of debt. It's losing a ton of money. It's not helpful. It's losing a lot of money, and I don't know why. They make mainframes. But again, worth a little due diligence, right? Maybe it goes to 0. I don't know. New Oriental Education and Technology Group looks like the high flyer of the year. Look at that stock. From 50 to 190, from 20 to 60. And Intel Education Group is similar. These are hot Chinese companies. Look at that. Woo! Climbing high. Now, I don't know about you, but I've heard that Chinese education companies are where it's at. And I plan on doing lots of due diligence. So I would say up are Chinese education companies. Wow. And those are companies like TAL and New Oriental Education and Technology, EDU. Right? Like the ending. Now the other one is Geo. So Geo is a very interesting business. Geo runs private penitentiaries. They run drug treatment facilities and other kinds of those facilities. And they have CoreCivic as a competitor. So it's interesting is this really isn't going anywhere. It used to be a REIT. But it's probably worth a little bit of homework to see where we're at here. This is private prisons. If we decide to start housing our refugees in public-private federal facilities, if we decide to crack down on shoplifting, it's companies like Geo and CXW, CoreCivic, who are going to see the rise. So that's just, it's worth a little bit of due diligence. I don't know that it's going to be any good or not, but it's worth the homework. Atlas Lithium. I mean, look at this stock. This stock is a powerhouse. Just rises and rises. That's actually one we've been tracking for a while. We'll see where that one goes. So another up is lithium. Atlas Lithium, ATLX. You know, they have options now. They didn't used to have options before. So we take a look at Digital Turbine, who we sold yesterday, down to $5.95. It's continuing with its downtrend. You know, we bought it and we just got out. It was crazy. And then Skills is also dropping. Don't know why that would be, though, but those are also worth looking. I like Skills. Player versus player. You remember we used to play Pirate 101. Do you remember that game? Pirate 101, Wizard 101, massive multiplayer games. And so I'm looking at FATH. We talked about that one. That's the manufacturing one. It's awful. You know, they're going to do a stock split tomorrow, and the stock is probably going to go down more. Ugh, I don't know. I'm looking at it, though. I'm looking at it. It's just, it's really hard to get excited about a company that is losing business. Now, Workhorse Group, they make trucks. Workhorse Group makes trucks. We're down to 40 cents a share. $90 million valuation. What's happening with Workhorse? Are they going to get bought? Are they going to stay in business? They're worth a look as well. There's so many stocks now when the market is crashing that are worth a look. And so, okay, so here's another one, Lumen. Lumen's got 1 billion shares, so it's 1.34 billion. They've also got a ton of debt. Earnings per share lost $9. This is a company that many business to business use, but it's just struggling, right? These guys have the wires under the ground, the fiber. I mean, it's a bet on infrastructure, but it's a tough bet. Lumen is a tough bet on a turnaround. I don't know. We talked about Alcoa. We looked at Alcoa. We struggle with Alcoa, right? We already talked about gold with Newmont. Now, Vale is another interesting one. So Vale Mining pays a healthy dividend worth $57 billion. Like a Rio Tinto and a BHP. We look at this stock. You see, classically around $12, it popped up, came down, up, lower highs, right? And so who knows? Maybe Vale isn't going to do so well. Another one of those manufacturing, Vale. Let's come back to our manufacturing line here. So they're Brazilian. Is also down for years. All right, it's fine. It's hard to get good people in Brazil. I've worked in Brazil. It's a tough place to do business. So we talked about Rocket. We talked about Loan Depot. We talked about Pfizer and the other drug companies. We talked about gold. We talked about telcos. And you can see the struggle. You can see the stocks are actually in a pretty big downturn today. So, where are we at? What else do you want to hear about? I'm going to put up the Bloomberg screen here while I talk to you a little bit more. Have I told you that I like Bloomberg? Yeah, I probably did. So, FinViz. Look at that. Market continues to correct. I might buy back the stuff I sold, just because this is falling. This is coming down. It's 42.43. Look at that. Tesla's down. Apple's down. Lots of stuff is down. I was going to show you this before. The 10-year Treasury at 4.626. That's up 7 basis points. That's a big increase. Crude oil at 93.50. Oil is up. Natural gas at 293 is up. S&P 500 is down. Gold is down. The dollar, okay, 104.96 euros, dollars per euro means the dollar is much stronger. And we're almost touching 150 euro per dollar. Dollar's very strong. So the other things to write down, right? Because we're going to probably go to our website and show you, actually maybe do an update with you here. But the US dollar is up. I love this word, bigly. It's not a real word. Oil is up. Natural gas is up. Gold is down. Long-term US Treasuries rates are up and the bonds are down. I'll prove that to you because I know you shouldn't really just listen. You should just say, Jeffrey, show me the data. Show me the money, Jeffrey. There, 10-year at 107.64. That is a through-the-floor kind of a move. The 10-year at 107.64. The 10-year U.S. Treasury at 107.64. You might as well just say it's in the toilet bowl because that's how much it's down. Copper at 363 is also much lower. That's actually getting down to our recession type reading. Silver's down 22.68. This is important. So if you're watching this video, you're probably wondering, am I going to get to the point? What's going on? But what I'm going to try to show you here is that a lot of the metrics, a lot of the things that we find are important are dropping. And that's terrible. Let's get rid of all these pages. Stocks that we follow. Atlas Lithium's doing great. Skills is down 17 cents. Digital Turbine is down. Affirm is down. AppLovin is down. And SMLP is down. And so, what are we going to do here? Probably going to make some kind of a trade at some point. It's almost 3. No, it's not even 1 o'clock yet. My time. All right. What else do we have? Corbis. You know, we still track Corbis. You look at it over the year. We sold it like $12 or something crazy. It's down to $6. I'm still not sure I buy it at $6, but I like Corbis. I've always liked that kind of business. The reason I looked at Corbis is that Checkpoint Pharmaceutical is actually in the same business. Close that up. Where's all my data? Where is all my data? It's got to be here somewhere. Still falling. Oh yeah, quantum companies. You know, Chicago Quantum is in the quantum business. So let's talk a little bit about that. So if we look at the large companies that have a quantum computing exposure and the small companies, right? So the big companies, Microsoft's down, but we know that. Google's fine. Amazon, Alibaba, IBM, Honeywell. And I always say that, you know, Alibaba was the first company we ran a quantum experiment on their Chinese quantum computer. And it worked fine. Then you have IonQ, Rigetti, Qubits, which is D-Wave, Arcit, which is data communications out of UK, Qubit, which is Quantum Computing Inc., which isn't really quantum, it's more data analytics, and then the warrants that go with it. You can see the large caps are down with the indices, but the quantum companies are actually doing okay. Looks like somebody might be making a little bet, a little wager on quantum, and it's not a bad move to make. We like that bet. I don't think quantum's going anywhere. I think it's fine. So here's my Bloomberg Live TV. I'm going to shut that off. Again, in the spirit of trying to clean things up. Talked about today's markets. We talked about the large caps being down. We talked about the S&P 500 breaking the neck of a Head and Shoulders, which, I mean, you could just argue that that's a whole bunch of hooey and a whole bunch of drama. You might be right? I don't know. Maybe you don't believe in technical analysis. Maybe if everyone believes in technical analysis, then you lose the validity of it, right? Here we go. This is what I was looking for. So let's get my notes down here. And by the way, I'm happy to put some of those notes out to our subscribers. So go ahead and subscribe to our website, our YouTube, and we are happy to put that in there for you. And again, the thing that I noticed is that the stocks that we picked went up today, made money, a lot of money today. When we just trade on our own, when we just trade on our instinct and our fundamental research, you can see not everything does that well. So if you just stick to the model, you make money. If you go off the reservation, a lot of times you don't make money. And so it's kind of where we get stuck. So let's take a look. Where are we at, Jeffrey? Talk to me. Volatility. So the VIX is up. So Jeffrey, why are you showing me this? What do I care? Well, let me tell you why I care. I care because we publish a website. And we talk about this all the time. The forces that drive market movement, volatility of stock prices. So the reality is the volatility of stock prices, historic volatility, is way down, way, way, way lower than we've ever seen it. And it keeps falling. But volatility index, or implied volatility, or pricing for volatility, is up, up, up. So insurance, much more expensive. Look at that. I mean, it was higher. It was 32. And then it hit 23. And then it hit 19. And then it hit 14. And then it was bottoming out at 13 handle, 13 and change. Then 15, 16, and 16, 17, then back down to 12. But now it's up to 19. So when the VIX goes up, stocks go down. It's not a causal relationship, but it's an important relationship because it's historically been true for the past year. So that's important. First thing you should look at. Second thing you should look at. Jeffrey, what's the second thing? Share price falling, momentum, choppy without direction. Where's my stuff? Hang on. I got stickies. Hang on. Looking to find which sticky has the note. If not, if none of them have the note, all right. So I'm just going to tell you what it said because it's not, I don't have it handy. So total equity market capitalization was $50 trillion on September 21. It was 6 calendar days ago. If I go to my other screens, sorry you can't see it, it's actually on my server. We're down to 49.2 trillion. Oh, September 25 it was 50. September 25, 2 days ago, it was 50. Now it's 49.2. We've lost, the market has gone down. The market lost $800 billion. The U.S. stock market lost $800 billion in the past day. From 50.0 trillion to 49.2 trillion. So when the market rallies pre-market, it almost feels like people are trying to make it back. You know, pull a martingale. I used to pull a lot of martingales. I like that. But in terms of momentum, market's losing its ass. And today, the market's down again. And large caps are down, which we talked about. Yeah, I think momentum is negative, right? And if you actually are like trying to add up the losses, it's pretty big. It hurts, actually, I would say. All right, high yield corporate bonds. How are we doing with high yield corporate bonds? And how the heck are you supposed to track that? First off, I don't know. You got me. But there's this ETF called HYG. HYG. It's an iShares ETF. Oh, look, it's down 0.09%, 0.1%. And if I look at it over 5 days, though, you see it's been dropping. It tried to recover on Wednesday morning, this morning, but it actually fell. So high yield corporate bonds are down. Oh, that's not good for stocks. Real estate values. How am I going to look at real estate values? What, I got to go to Zillow? Hey, Zillow, what's my house worth? I don't know. I don't know what my house is worth. I got nothing, right? So what I do know, though, is there's an ETF called USRT. It's a REIT. It's a core REIT with $2 billion in assets. It's down almost 1%. So that's not helpful. Let's look at it over 5 days. It's down. Look at it over a month. It fell on the floor. This thing was trading at 50. Now it's at 46 and change. Down almost 10%. Real estate down almost 10% in a week, guys. You should be like shaking in your boots, right? This feels like 1929 to 1932. Real estate falls 10%. I'm surprised I'm not hearing some of the people in the neighborhood screaming. Silver, platinum, copper. We already talked about that. Those were all down. Maybe not platinum. Platinum is PPLT. I probably need to make like a portfolio of all this stuff so it's easier to look at, but I don't mind. I'll walk you through it. Platinum's down 2% today for the month. Platinum looks like it bottomed September 8th, came up, came back down. So platinum's down, silver's down, copper's down. Okay. Energy prices. Now the good news is when energy prices go up, market goes up. So that's great. How are we doing? Crude oil is up 3.4% today. Crude oil is still climbing. Now, the funny part is crude oil drives up energy stocks. So I bet you that energy stocks are up. But the question is anything else up? See, energy's up. Oh yeah, look at that. All green. Green is good for energy. But I'm not sure that's enough to take up the market. And when energy goes up, aerospace goes down. Airlines go down. Trucking goes down. Retail goes down. Consumer disposable income goes down. So, at this point, though, energy's up today. So that's one of those contrarian, doesn't feel quite intuitive. But our model says when oil goes up, and then natural gas as well, market should go up. So it's a little counterintuitive. The US dollar. The US dollar, holy cow. Look at that thing. Screaming higher. Screaming higher. It looks like we're going to have a euro at parity. We're going to have a euro dollar again. This is nuts. I heard that on Bloomberg like 3-4 days ago, and I thought they were joking, right? So let's be honest here. The US dollar, screaming higher. Almost unchecked since mid-July. Except for a tiny, I wouldn't even call it a correction, a tiny down move at the end of August. And that's it. Screaming higher. Screaming higher. The US dollar. By the way, US dollar, when it goes up, bad for stocks. Remember we talked about Alcoa? Alcoa has $2.7 billion of losses on currency hedging. The dollar fell, they hedged, they've taken an enormous loss. Sorry about that. A little diluted apple juice. I don't need all the sugar, but I like it. Gold. How we doing on gold, Jeffrey? Talk to me about gold. Gold fell out of bed. Gold fell out of bed. That's all I can say. Gold fell out of bed. Goodbye. Long-term interest rates. I'm hot under the collar right now. I'm uncomfortably hot. Long-term interest rates, the 10-year is up 6 basis points, 5.8 basis points to 4.61. Now you might argue that that's not a big deal, but it's a huge deal. The 30-year, it's up less. It's up 3 basis points. But still, Long-term interest rates are up. Long-term interest rates. So what does that mean? That means it's a better value to buy a bond today, and it's harder to justify a big mortgage. So maybe buy a smaller house. And it means banks are suffering AOCI losses on held to maturity investments and actual kind of what I'll call normal losses on available for sale investments. So banks hold U.S. Treasury securities. They do. They've always held them. What else is important here? More expensive for companies to borrow. More expensive for the U.S. government to borrow. It's just a nice alternative to having money in the stock market. If you could earn 4.7% for 30 years, I'm thinking maybe if I'm going to live another 30 years, I should do that. I bet you there's zero coupon bonds, right? Where I still have to take the amortization. I still have to take it as income. But there's zero coupon bonds that are probably super cheap at this point. So that's what's happening with the long-term treasuries. Oh, government net cash intake. When last we looked, you're going to love this, the government was tightening. So they didn't raise interest rates at the last FOMC meeting, but instead, they're squeezing. They reduced $250 billion of liquidity in the last 2 weeks. I want you to think about that. $250 billion, poof, out of people's accounts, out of banks' reserves, just gone. Maybe never to be seen again. So you were a bank and you were an investor in a hedge fund and you were thinking, oh, let's buy some stocks. Well, it's hard to buy stocks when $250 billion goes poof in 2 weeks. Bitcoin. It's too early to tell the impact of Bitcoin on stocks. It is. But we'll take a look anyway. Oh, Bitcoin's flat. But what's interesting is if you look over 5 days, Bitcoin, let's look over a month. Bitcoin has slowly moved from 25,000 and change to a peak of 27 to 26. So we're at around 26. So Bitcoin's been kind of holding its own. If you look over the year, it was a cheaper point where it was at like 16. Buying and selling Bitcoin feels like buying and selling stocks. You know, cheap stocks where you're not sure or expensive stocks where you're not sure what's going on under the hood. You don't really care. You're buying it because your friends are buying it. So there's Bitcoin. Other effects. So inflation. Has inflation? I don't know. We haven't had any new data. Threat of war. Who knows? Corporate income tax. No one knows. Changes on individual tax rates. Tariffs and trade restrictions. Haven't heard. Uncertainty in U.S. government policies and procedures. That one is a big deal. So I would say uncertainty in U.S. federal and state government policies is very high now because of the shutdown potential on October 1st. So if the government shuts down, I don't even know what it's going to do, but it's just uncertain, right? If I'm a government contractor, I don't know. Customer theft and credit delinquency. You know, I hear a lot of anecdotal data that says this is getting worse. Maybe it is. I know shrink, which is what they call theft, is on the rise broadly in the U.S. economy. But credit delinquency, I'm not sure. So we're going to take a quick look here. We're going to ask Fred, hey Fred, how are we doing with delinquency rates? All consumer loans, all commercial banks. 2.36. It is on the rise, but it is lower than it was. Look at that spike. It's on the rise, but the data hasn't been updated since August 21. So it's on the rise as of August 21. So it's we don't have new data for a month. You can't really play on that one. Labor cost increases. Well, a lot of it depends. We have a president of the United States who joined the picket line of the UAW. So I would say labor costs will continue to rise. By the way, Costco, C-O-S-T, declared labor costs a drag on earnings, an issue, right? And so it's happening. And so when I look at all that, the only thing that was good for stocks right now was oil prices up. And that's bad for the consumer. So all of these factors are calling for a lower stock market price. And so now I ask you, is now the time to make conservative passive bets in the stock market? I would say no. I would say if you want to make a passive investment in the stock market, you're basically buying this. And so it sure feels like it's looking to break support levels. Should you buy the riskiest stock portfolios? The Chicago Quantum net score says yes. The Chicago Quantum net score says that if you're willing to run the model, what we call our Taylor Swift portfolio, and you're willing to put some money into it, you will do better than the passive index. Now, it might mean you lose less, but it could mean on any day when there's a little bit of risk appetite, you make a fortune. Now, on the converse of that, I've also been tracking the stocks that the model says you should short or avoid, and many of those stocks were down hard, down like 20, 30% in a day. And so what I would say is now is a good time to be long risk and short garbage. Go long, what I'll call good risk, and short garbage risk. I think you're going to do okay. You're going to have to hedge that bet, though, a little bit. And that's why you short. You have to short something so you're hedging. So that's what we are today. So did the stock market change since we started talking? In the last day here, we've been down. Small caps are up a little. Large caps are down. We know that. Large caps are down. Utilities are down because interest rates are up. Consumer discretionary. I bet you comms are down. Yeah, telecom's down 1%. Crude oil's higher. Gold's lower. Gas is higher. Yields are up. So what I would say is this. This is one of those days where you're just going to feel a lot of pain if you're a traditional person who's just buying and holding. Today, buy and hold is a lot of pain. So you might not want to do that. You might want to put some money in a risk. So now I'm going to get to the commercial. Right? Commercial starts at